mean, Tesla has been a cult stock, but for a good reason. You know, they have a great product. You can't value the company particularly, but S&P saw reason to add it to the S&P, and that's going to be worth, 10 to 15% today, I suspect.
Yeah, you don't want to own it, though. I mean, and people have been knocking the valuation forever, Kerry, but it hasn't seemed to matter. Why is this a Teflon Tesla, if you will?
Well, Tesla represents a couple of aspects to the market people love. It's great technology, but it's also something that you can relate to. Everyone owns a car, and this is a beautiful car that works fantastically well. It's created by a company and a CEO who represents innovation, charisma, and it has a huge sentimental value to investors. It's the opposite, of course, of the reopening trade. So if you want to talk about having a balanced portfolio, you can own some Tesla, and then you can own airlines and cruise ships, because it gives you an opportunity to participate in what has worked so far in this rally. And remember, Tesla traded up to about where it might trade today on September 1st, or right before they split the stock. Then it traded down about 20%, and now it's coming back up. And if they can continue to earn money and we can value it, it might be the sort of name that we would own. Of course, I wish we did, given the statistic you just gave us. But you can't own all the stocks.
Well, it's easy to.
You can't have. No, everything.
It's easy to look smart after the fact. Kerry, quickly, you trim some of your big tech. Tell us about Fortive and Vontier, two industrial names we never talk about with funny names that you are now putting your money into.
Exactly. So Danaher, which is a healthcare instrument and supply company, spun out Fortive, which is a high technology instrumentation and analytics company. We bought more Fortive. We liked the valuation, and they spun out Vontier, which is a logistics company that does a lot of fuel measurements. And you would know about that, Brian. Again, not an expensive stock, very attractively priced. And those are reopening trades. We bought them both, and we think that they will participate in this rally if it continues as we move toward a reopening life after the vaccines. And we have to have something that's not just remote living and remote working kinds of trades. So we also cut Apple because that was expensive.
Shepard Smith here. Thanks for watching CNBC on YouTube.